I saw you dancing in a crowded room. You look so happy when I'm not with you. But then you saw me, caught you by surprise. A single teardrop falling from your eye. I don't know why I ran away. I make you cry when I run away. You could have asked me why I broke your heart. You could have told me that you fell apart. But you walked past me like I wasn't there, and just pretended like you didn't care. I don't know why I ran away. I make you cry when I run away. Take me back, 'cause I wanna stay. Save your tears for another, save your tears for another day. Save your tears for another day. I made you think that I would always stay. I said some things that I should never say. I broke your heart like someone did to mine. Now you won't love me for a second time. I don't know why I ran away. I make you cry when I run away. Take me back, 'cause I wanna stay. Save your tears for another. I realize that I'm much too late, and you deserve someone better. Save your tears for another day. Save your
Welcome. We are back. Horrible day for the market. In fact, the worst day in a very long time. I don't know the exact amount, but we'll take a look at it a little bit later. And it's not just really the worst day. It's mainly the week. Let's go over to the weekly for the S&P. And if we take a look, you're down pretty much 6% this week alone on the S&P 500. You know, we still have to see how the weekly candle closes tomorrow, but in this whole entire bear market, you've never closed a week down 6%. You had negative 5.75% in January. Right now, we're sitting at negative 5.94%. So, you know, you might definitely, if you have a rally tomorrow, you might close higher than that. But if you were to imagine if the week closed right here, it would be the worst close or the worst week of this bear market so far. I mean, regardless, this is definitely the worst, like 10 days or however you want to put it. If you include last week too, the S&P has fallen 12% in 1 week. That's crashing in my opinion. I don't know what the people want to say for the statistics of what's a crash in a bear market and whatnot. 12% in a week, in my opinion, is a crash. It's not a full-on crash, but it's what you see during a crash. So the market's crashing, and that's very far from normal. Talk about my thoughts on the market in a little bit. We're going to start off with crypto, then I'm going to talk about some other markets, and then I'll give you a little bit more of an in-depth analysis on what I think about the stock market. Tomorrow has some very interesting things lining up. You've got quadruple witching. For those of you who don't know what that is, it's basically a major expiration day for a lot of different derivatives. So a lot of your stock options you're looking at, you're going to see they have like these they have like all these expirations, but a lot of them have this same common expiration, which is like the third Friday. So it's like 4 times a year on the third Friday of the month, you get quadruple witching. It could just lead to some funny things happening intraday. It's just always feels like a very spooky day in the market when we have it. We also have Powell tomorrow morning. At 8:45 a.m. before the market opens, speaking welcoming remarks. Looks like the conference on the international roles of the U.S. dollars. I don't know if that's going to be affecting the market, but we've got that. And on top of that, we have the quad witching, Powell speaking, the fact that we were down so much today and so much this week. So you already have a lot of volatility in the market. And on top of all of that, we have a 3-day weekend as well. So tomorrow, it could be crazy. We'll see what happens. You know, what you might end up seeing, and this happens quite a bit when you have a 3-day weekend, especially with the news event on a Friday. You might end up seeing like a very crazy morning, like insane, and then you might start to see that volume dry up towards the afternoon. So, you know, my game plan is going to be like just the first couple hours of the day. You know, we're going to talk about some potential day trades I'm looking at. I'm just going to be focusing on those. If they work, great. If they don't work, I'm just chalking it up for the week, and I'll wait till next Tuesday for the market to open. So that's where I'm at. That's where the market's going to be at. And yeah, let's get back to that in a little bit. Let's talk about crypto. And very important for crypto as well, Bitcoin is testing a very important level. This is pretty much the most important level that Bitcoin can test in the short term, 20K. All right, your previous cycle top from 2017 is now being tested as support. I talked about this a few nights ago. What was once major euphoria at this exact price is now major fear and pain and liquidations at this price. So it's kind of the complete opposite of about 5 years ago. And that's where you're currently at. You're testing this key level. Didn't really get any follow through after the bullish pin bar yesterday. Unfortunately, you're actually about to close with a bullish engulfing candle. So bullish candle into a bearish candle. It's okay, I guess, as long as you can try and hold 19.9, 20K. You're testing it right now. As we speak, Bitcoin is testing its most important level. Like literally in this exact moment, it's down 10% on the day. This is it. If you care about crypto, this is like watching the Super Bowl pretty much, and it's like towards the end of the game and your favorite team is down, but you're hanging on by a thread. Keep an eye on this, all right? It's going to be a very interesting weekend for Bitcoin. And then moving on to Ethereum, still kind of testing the PCZ, the Scarlet getting a little bit lower, still in the PCZ area. I would say you still have the potential for classic bullish divergence. It probably just depends on whether or not Bitcoin can hold this $20,000-ish area. So still keeping a very close eye on this huge, massive bullish Gartley on Ethereum. We'll see what happens, but I think Bitcoin's going to need to step up first for this to even have a chance at playing out, right? Let's move over to some other markets now. We're going to start off with the US 10-year. After that first red blow off the top candle, as I said yesterday, you got another fall through day with price action to the downside. And you actually, this is the crazy part, at one point you put in a new high, a new like rally high, and then you ended up dumping, which is crazy. But yeah, pretty much retesting your highs in May as a potential support if that doesn't hold. See what happens. But I did actually talk about this little like double top looking formation on the 10-year last night on stream. Looks like it gave up that level we were talking about, and it's flushing a little bit right now. Very similar to the US 10-year is the dollar currency index, which is doing pretty much the same thing. On lower time frames, remember if you watched last night's stream, I said that this was a bearish pattern, a right angle ascending broadening wedge, and that played out beautifully. Made a large dump after breaking down from that bearish pattern. Can't be surprised. So that's pretty much played out now. Go over to the daily. You're retesting these end of April, beginning of May highs or resistance as potential support. And moving on to metals, gold is rallying after the bullish engulfing candle yesterday, got back above the 200-day moving average. Hanging on somehow. You know, it was looking like a bear flag to me, and I guess it kind of already played out like over here. Played out very quickly, and now you're, well, on one hand, you are kind of retesting your previous mainline as a supply line. But also, the other way you can look at this is like one large dragon pattern. That. So there's your dragon on gold. Moving on to silver. This was another one that you're looking at as a potential dragon last night. The variables are changing. Now silver is testing a breakout of this dragon pattern. So Metals have been pretty quiet since April. They had a nice move in the end of winter, beginning of spring, and then they kind of sold off with everything else in April and May. But now metals are starting to, I'd say right now metals look better than a lot of equities. Well, at least silver and gold. I haven't looked at anything else really, but it looks like the tone is starting to shift a little bit, so I'd keep an eye on these. The Hang Seng Index was down 2% today. Major bearish engulfing candle. MACD crossed red. That's not looking too nice to me. And XLE continuing even lower. The options, the put options, I haven't even looked at them, but they could be up maybe like 1,000% at this point. I don't even know. I'll check tomorrow, I guess. But the put options I alerted to premium members last week expire tomorrow. And they were already up 600% yesterday, so I have no clue how much they're up right now. But these puts, you can see they expire tomorrow, so sheesh. XLE continuing lower, literally on this exact day, June 8th, at the top, I was saying how bearish I was on this name. That was what the whole entire stream was about. Go back to it. Those are some technicals playing out in all of this craziness, I guess. By the way, I need to, I wanted to say, and then I started streaming and I forgot. JSOB Electrician, thank you very much for the $1 super chat. I don't think, like, I think it's, you were like 1 cent off. I think it's like $1 and higher it pops up. I don't know if it's $1 or $3, I forget. But something like that. Regardless though, thank you very much for sending the tip earlier. I really appreciate it. I just looked at the chat again, I remembered, but appreciate it. So there's XLE, and it's even filled this gap over here, but it's also testing a breakdown of this previous resistance areas. All right, and then do we look at crude oil? I'm not sure. So crude oil broke down from this wedge, kind of went down to the support area, then you got a bullish pin bar off of it. So it's a little bit of a 50-50 short term. It's like larger time frames, you have this wedge breakdown, but then shorter time frames, you kind of look at this as like a bull flag, right? So it's a little bit 50-50. So those are the other markets. Dustin, I'm going to be getting to SPY in like a minute. I just want to talk about the VIX first, which is still making higher lows, right? You have a low, another low, higher low, higher low, higher low, higher low, but still has not been able to crack above 37, despite the market being at the yearly lows, right? The VIX was actually higher in May when the S&P was higher. Now the S&P is lower and the VIX is lower. A little bit interesting. Let's see if this will work. It's not gonna really work. I was trying to do something, but it wouldn't make sense on this. But we could just look at it like this, right? VIX was up over here in May. S&P 500 in May was, well, the beginning of May was all the way up over here. So take a look at this, all right? Let's find the exact date. All right. So on May 2nd, the VIX was at 36 on May 2nd. On May 2nd, the S&P was all the way up over here at 408. So now the S&P is actually 10% lower, but the VIX hasn't even gotten above this high. Really interesting. And there's a lot of factors that lead to that, but I'm just saying it's something you want to keep an eye on. And this is another interesting thing heading into tomorrow, okay? And this is going to start what's going to be the next few minutes of discussion. So on the VIX, on the 1 hour, I have two very clear tops, right? Also, it gapped up today. You've got this gap fill around 29.50-ish from today. So here's one thing I'm keeping on. First of all, setting my alert above today's highs, okay? If the VIX breaks above that tomorrow, that's probably when I'll be, I'm sorry if that was loud. If the VIX breaks above these highs tomorrow, that's probably when the market could be selling off, like for real. So as long as the VIX can stay under this like 35-ish area, it could allow for a relief rally tomorrow. Got two very well-defined highs, one from June 13th, which I think Monday. So twice, pretty much, the market had a horrible day on Monday, the market had a horrible day today, and your VIX got up to that same exact level before rejecting. You got that 1 hour shooting star candle. It is something you want to keep an eye on, even testing a breakdown of this demand line. So the first thing I would keep an eye on for tomorrow is just this VIX, looking for the breakdown here. And then leading into the S&P 500 on the flip side, just like how I drew this rising wedge on the VIX, right? Surprise, surprise. There's a falling wedge on the S&P 500. So here's your SPY. I'm going to be honest with you, this supply line is not great. The demand line is great. You have like 1, 2, 3, 4, 5 touches. Supply line, I just connected this high to like these candle highs. Like this could definitely be argued. But even if we take out this supply line, you have a very nice demand line that you're bouncing off of. But what else do you have on the 1 hour for the 500? Classic bullish divergence. And again, this is the 1 hour. So maybe tomorrow's a little bit. The 1 hour I'd say is like, when you have a 1 hour signal, I'd say it's like it could take up to 2 to 3 days for that to play out. So, you know, I don't know if it's going to play out right away tomorrow, but you do have some classic bullish divergence on both oscillators on the 1 hour. And have this wedge looking structure. We go on to even lower time frames, and this is going to be the case for a lot of other names that we're going to talk about tonight. On the 15-minute throughout the day, you pretty much develop this wedge pattern on the S&P 500. Look at the same thing on the QQQ and a lot of large cap names, okay? And this is what makes tomorrow very interesting. You have these patterns set up across the board. So that's your S&P and the QQQ on the 15-minute. Let's take a look at something like Amazon, all right? Same type of idea. Let's take a look at something like Nvidia. Same type of idea. Let's take a look at MU. Same type of idea. So your whole entire price action from today was just wedges. So heading into tomorrow, definitely keep a close eye on how these play out. And really, I would look at them like this, right? You just want to stay above today's lows. The reward to risk on it is putting a stop a little bit under today's lows and then looking for your next resistance. So it just sets up a good reward to risk on the long side tomorrow, I think for the first time in a few days. I was saying on Tuesday night, heading into FOMC on Wednesday, that I thought that the market could bounce. We did get a bounce on Wednesday. And then we gapped down like crazy today. So if you don't remember, like yesterday after the FOMC, the market had a pretty nice move. And then last night on stream, I was saying, you know, I don't really know, just look at the levels. And then you ended up gapping down today and you just kind of stayed red the whole entire day. Now tomorrow, I'm leaning back towards what I was saying on Tuesday night. You have some interesting low time frame setups. The overall trend is very disgusting right now. It's just straight down. But on low time frames, I do think, you know, if we gap down in the morning, that could invalidate a lot of this, right? If MU, for example, opens down like over here, that invalidates everything, right? Same thing for all the patterns I just showed you, right? If NVIDIA opens down here, that's invalidating all that. So a gap down could screw up a lot of that. But as long as you can hold these lows, it just sets up an interesting reward to risk, where you know an area where it could make sense from a technical standpoint to cut a loss. And you know that you don't have much resistance because today a lot of these names just went straight down after the gap down. So that's something I'm going to be keeping a very close eye on tomorrow, not financial advice. But in terms of the market in general, going back over to the 1 hour, you've got that classic bullish divergence. These are some of my levels. You've also got a gap fill around 378 from today's gap down on the S&P 500. Let's stick to the S&P before we move on to others. On the daily as well, you actually somewhat bounced off this level that I was talking about last night on stream, okay? I got this level, this 364, 365-ish level from these highs over here, from, well, basically this day and kind of this day, and then also all these lows. So this is a key level that the S&P 500 is currently testing. And honestly, I'm saying a key level. If we really zoom out, this isn't much of a level. It's just all you have right here. If we go over to the weekly, you can't even, sorry about that. If you go over to the weekly, you really can't even see that level. That level is 365. Over here on the weekly, like, it just went straight up there. It's only like a daily level if you really zoom in. It was somewhat your low of day today, so we'll see. But really when a market's going straight up or straight down, easiest way to judge continuation is if it's going straight up, if you break over the previous day's high, and if it's going straight down, if you break under the previous day's low. It's a very easy thing to do. And I remember, you know, I'm talking completely opposite right now, but back over here, when we were in like autopilot mode, it was just a question of, all right, we're going straight up. If you break above yesterday's high, well, imagine I'm streaming, right? Imagine I'm streaming and it's October 19th, 2021. I'd be saying something like, all right, we're just going straight up right now. If you break above today's high, that could set up a nice continuation move. But right now it's the opposite. Right now we're going straight down. If you break below today's low, that could set up a continuation trend. So that's also another easy way you can just judge a market in general. It's easier said than done as well. Of course, you want to be keeping in mind some other variables and stuff like that. But yeah, that's your S&P 500. The QQQ on the 1 hour also has that classic bullish divergence. set up. I forgot to mention this as well, but you also got 4-hour bullish pin bars in a lot of different areas. The QQQ has a 4-hour bullish pin bar. The S&P 500 also has a 4-hour bullish pin bar. So 4-hour, 1-hour, 15-minute are all showing bullish signals from a technical standpoint. Now, again, keep in mind, the 1-hour and the 4-hour is not really like a time frame that you day trade. That's like a swingable time frame. Really, it's only the 15-minute that I would be concerned about for like day trades tomorrow. But just in general, that could maybe help out next week. It might be nice to just get a little bit of a breather over the weekend. I'm sure a lot of people need that after a week like this week. So we'll see what happens. That's your QQQ and S&P, the Russell 2000. This is a big update tonight on the Russell 2000. It is breaking under the critical zone. I've been hoping that it was going to hold it, but it's breaking under it for right now. So just take a look at this for a second together. Doesn't saying I was looking and looks kind of flat heading into the long weekend and feel like the relief rally will come Monday. I don't think it's coming Monday. The market's closed, I believe, on Monday. So maybe Tuesday. I got what you're saying. I'm just being picky. JSOB Electrician says, anyone use Bollinger Bands? I do. I think you know that. Maybe you're just asking in the chat when you watch the streams. So yeah, the Russell 2000, this was a critical zone. For all of you small cap traders, this was the key area. And it's under it for right now. Maybe somehow it springs back above it. You were able to hold it the first time you tested it in May. But as of right now, under a very critical area for the Russell 2000. And the next level at this point, gap fill around 156. Gap fill around 156. I mean, you got a couple other levels if you really zoom in here. You've got some 159 previous highs. There's a few levels, but that's the critical zone. If we go over to the weekly, you can see it a lot clearer. This was the critical area you're currently under. So that's where you're at on the Russell 2000. It's unfortunate. If we somehow start rallying on tomorrow or Tuesday, just barely the classic bullish divergence is still possible, not only on the Russell 2000, but also on the QQQ. I think the SPY got invalidated on the daily. Yeah, the SPY is the only one that's gotten invalidated. So to get classic bullish divergence, you need to have, this will work, you need to have a lower low on price. The SPY has right over here, with a higher low from one MACD island to the next one. However, in this scenario, you do not. You have a lower low. If the island was like peaked out right over here and I could move my line to over there, you would have it on the SPY, but the SPY actually lost it today. But the QQQ and the Russell 2000 still have a chance. Moving on to the NASDAQ, this still has a chance as well. And NASDAQ is kind of, the S&P, in my opinion, broke under the demand line of this falling wedge. NASDAQ, I think, is holding it. But the NASDAQ is under 10.8K, which is another critical level. So it's really mixed. It really is mixed. The ARK ETF down 6% today after a pretty big day yesterday. Went right up to that gap fill. I'd say it's just in a range between 35 and 40. Okay, similar to these 2 days over here, May 11th and 12th. You're just back in that little range. So yeah, that's the overall market. Those are my thoughts. Long term, I'm gonna be honest, I still don't really have much of a bias. Short term, and by short term I mean like tomorrow, maybe Tuesday of next week, because the market's closed on Monday. I do think the 1 hour divergence and the fact that we're so oversold, I do think we can get a little bit of a relief rally. But I don't think that, I say a relief rally very carefully. I still think that we're not really at a level that makes sense for like the complete bottom on a lot of these names, but you never know. So just taking it day by day. And yeah, there's really no ongoing swings to talk about. Today was a pretty rough day in terms of options for the first time in a while. I actually have this right. This is the last 62 option alerts in premium. You can see it's pretty nice. You don't even see the numbers, but today, just these ones over here, a little bit rough. It's all started off with yesterday I alerted some AMC swing, AMC call swing idea. and it didn't work out. So I alerted this yesterday, and if you didn't notice, like 90% of stocks, I think even more than that or something like that, were down today. I mean, the market was a bloodbath today. So I wouldn't say it's like the AMC swing failed by itself. It was just like, that's the risk of overnighting, and that's why I say only put in what you're willing to risk, because I view this as a swing, which means overnighting, and you can get things like a 3% gap down out of nowhere. Even though it's uncommon, it's always possible, and that's why I always say this. I said the same thing with the XLE put swing, even though thankfully that worked out and they went up 600%. Only put in what you're willing to risk, because I view this as a swing. So it is what it is. On the losses today, you know, it sucked, but again, the last option swing I shared, these are up more than 600% since, and then these ones I cut at like a 23% loss. So this is what I mean by reward to risk, right? When your trades are working, scaling out, having multiple targets, right? These were, these were all the targets on XLE. So when your trade's working out, having multiple targets, taking profits along the way, and when it doesn't work out, this red box over here, cutting losses. And that's what I did with AMC today in the morning, very early. I said I was marking them red. 9:50 a.m. So at 9:50 a.m. I already marked this swing red. This was alerted yesterday before the close. 20 minutes into the day today, they were down like 23%, and I marked them red. So that was actually like the highest point it was, like for the rest of the day when I marked them red. So, you know, I always talk about when the trades are doing well, which thankfully for the last 62 of them, most of the time it's been going well. But let me talk about where things can go wrong today, because they did go wrong today. So hopefully you can learn some lessons from it, I guess. But yeah, literally right on this candle, I marked the AMC swing red. It was a 23% loss at the time, and it saved, I mean, just after that on stock price, AMC fell another 7% intraday. So risk management is very, very important. All right. So that was the first thing that went wrong today, which was alerted yesterday technically. And then after that, alerted SPY calls at 10:31. Let's go look for that analysis. And that's the thing with today, like a lot of patterns that usually play out, they just didn't today. A lot of the patterns that led to these great wins, I follow the same metrics I use for these trades as well. And that's why it's all a numbers game. You can have the same types of variables in all your trades, and some trades it's just not going to work, and some days it's just not going to work, which was today. I said what, 10 something? 1031 S&P 500. Why am I still? This was the idea. It was a wedge breakout testing VWAP. It was at the lower Bollinger Band on the 15, had a bullish engulfing candle. Again, these are all the variables I usually look for. It just rejected the VWAP and it failed, and I marked them red, I think somewhere around like over here, and then it ended up falling down to like over here later in the day. So, you know, these are lottos. They're lottos. I'm literally saying only put in what you're willing to risk. Super lottos. And I'm cutting them at like under 30% losses. So that's pretty much what happened with the other ones too. So this was the only one that worked out today. I shared some GameStop puts on this bear flag. It pretty much went down over here. The puts went up like 20%. Pretty much what happened today. Just same variables, but just didn't play out. This was one, a lot of the stops helped today. This one didn't. This was a horrible, this one got me to, or to the 5 minute, but it's always in hindsight, you know? So I shared some SPY puts, right? I was watching this bear flag, and literally on this candle, it looked like literally like right when it was here, all you see is a wick right now, but at the time, like if you looked at the second, it was a green body up there, and it looked like it was breaking over these highs. It was above the VWAP really for the first time in the day, or the furthest above the VWAP for the first time. It was even above the supply line. Like that really could have been a setup for a rally after that. It's just today was, I guess, opposite day. I don't know what it was, but just a lot of invalidations and things just not working out. And that's why I was able to, you know, manage risk. A lot of the stops helped apart from this one, because right after this, it actually did sell off. But that's what happens, all right? You know, there's home run trades, and then it's just keeping the losses small when things are not going wrong. The same thing goes for the swings, right? There's home run swings, and then when there's not, it's just trying to keep the losses small. The phrase I like to use is weathering the storm. That's what it's all about in times of peace. The S&P is down 6% this week alone. it's tough. It really is tough. That's where we're at. So that's my recap for today. JG says, is SPY 1 hour triple bearish divergence valid? I think you're looking at it as hidden bearish divergence, which, yeah, this is hidden bearish divergence, and then now you're waning again. So it's like, unless tomorrow you gap down on this MACD island, does something like this, right? And it increases negative momentum, I would say that it could still play out. But for right now, to me, it looks like classic bullish divergence is developing. So you did have the bearish divergence, like technically right over here. But now since your MACD is waning and you made a lower low on price with a lot less negative momentum, it's flipping from bearish divergence to bullish divergence. But it's not confirmed yet. So we'll see tomorrow. All right. So that's the majority of my analysis. Fisker, it's breaking out today, and this is the same thing, very similar to AMC. Like, even AMC on the 1 hour was breaking out yesterday. This is what happens, and this is why, you know, in bear markets it could be really tough, because I wouldn't say that Fisker and AMC were down 7% today and their breakouts failed because of Fisker and AMC. I would more so say it's because the S&P was down like 4% at one point today. You know, the overall market's just, I don't know what word to use that's PG, but that's just what it is right now, and it's dragging a lot of names down, which makes it a lot harder. That's why a lot of bullish variables can really underperform in bearish conditions, because even if you have the variables, if the overall market's down, people tend to just follow that, right? That's what happened on a lot of names. Still keeping an eye on this AMC wedge. Got a 1 hour bullish engulfing candle over here. On Fisker, it's just backing the channel. You've got triple classic bullish divergence. On Fisker 1 hour, you somehow held $8. You broke under it today. You saw a new all-time low today, but you were able to close above it. Still in the downsloping channel, you're still kind of testing these lows. You're still in your larger wedge. It's not a lot of technical damage being done. You even have the potential for triple classic bullish divergence on the daily, so it might just need some more time for the market to cool down, but a lot of variables still could develop over the next couple of weeks for Fisker. Hopefully it can hold this general area. CLOV was able to hold $2 today, only down 5%, which is still pretty rough, but you still have the classic bullish divergence developing. You know, when CLOV was over here, the market was at a higher price on Monday. Now the market's at a lower price and CLOV is at a higher price. So in that sense, it's kind of outperforming, at least relatively. Still in this pattern, still waiting to see which way this breaks. RDBX, we talked about this last night, had a really nice pre-market. It went all the way up to like 14 pre-market. I had some calls coming into today, and I woke up in the morning and it was up like 19% pre-market, and I was so excited, but didn't really matter. I mean, it kind of did, but like I was up like 20% on my calls, and the stock price was almost up like 20%. So the IV was just absolutely insane, because it's been going crazy. But technicals did still play out, and I don't know, it's just an update on one of the names we talked about last night. Nice gap up, and then had a little bit of a move. Like, it perfectly back tested this as well, which I did chart last night and show you all on stream. It literally gapped up, went crazy, then it back tested a previous supply and then rallied off of it one more time to hit this resistance level, and then it dumped again. So in a sense, the technicals did still play out. It's just the option chain was a little bit messed up, and kind of is. So those are just some updates. Tesla down 9% today. I tried to place some Tesla calls over here. Cut my loss probably around over here. So, you know, it's a very crazy market right now. So yeah, I think that's going to be it for tonight's stream. Thank you for watching the stream. Next stream will probably be Tuesday of next week, as it's the market's closed on Monday. And yeah, have a good weekend. If you choose to trade tomorrow, good luck. Thank you for watching the stream. Check out the links in the description. Donate crypto to Ukraine, free course, free Discord, my disclaimers, tips if you ever want to, and yeah, premium. Pretty interesting, actually. The market's tanking right now, and I think there's like 4 or 5 new premium members so far this week. Usually like there's usually a very large correlation. When like the market's going down, it's like nobody really is signing up. Then when the market's going up, signups are usually up. So interesting. We have a new handful of people joining. And I hope I can make you proud. You know, I know today was a little bit rough, but I'm gonna keep at it. And yeah, thank you for supporting me, watching the stream. I'll see you in the Discord. Peace out.